Hey everyone, to begin with, let me wish you all a very happy Diwali. I know this time markets are not in a festive mood and portfolio is certainly not showing prosperity. However, let's not forget that market has created massive wealth for the investors in last 3-4 years. And we can't expect the market to only go up. Corrections are part of the stock market journey. In fact, for long-term investors, corrections only create buying opportunity. Now, before we discuss the stock picks for Diwali 2024, let me quickly share my viewpoint on current state of market. So Nifty large cap index is down around 8 to 9% from the peak and mid and small cap is down around 10%. As far as individual stocks are concerned, a lot of them have fallen 20 to 25% from the peak. The biggest question here is, has the market bottomed out? I see a lot of people calling this correction a massive Diwali discount. On the other hand, many people are actually saying that this correction is just the beginning and worse is yet to come. So let me tell you my thought process. I believe that in the last few years, markets have rallied way too much. Especially your mid-cap and small-cap stocks have jumped too much. Initially during COVID, the valuations were ultra cheap. And when eventually the economy opened up, earnings expanded. So due to very high earning growth and cheap valuation, stock rallied a lot. And then the valuation moved from cheap to reasonable. But the market kept on going up due to huge retail participation and massive SIPs. And eventually valuations became expensive. Now after this recent correction, I believe that the froth has slightly settled down. Barring the banking and financial sector, I don't see a lot of valuation comfort yet. So in my opinion, it's not a massive Diwali discount yet since the prices were already too high and we need more correction to really call it a discount. Now as far as earning growth is concerned, I closely track quarter results to understand the earning growth as compared to the valuation. And after a long time, Q2 results are showing some signs of slowdown. So high valuation and slowdown in earning is one of the key reasons why FIs have sold investment worth more than 1 lakh crore in October month itself. If we continue to see weakness in Q3 and Q4 result, then can be more weakness in the stock market. However, if the upcoming quarter shows recovery, we might bottom out shortly. So whether the market has bottomed out or there can be further correction would depend upon earning growth. Having said this, for long-term investor, there is no need to panic. Just keep investing systematically without worrying about corrections because it's not the first time markets have corrected and certainly not the last time. As long as you understand the risk in stock market and you invest in good companies for long term, you will emerge as winner. So that's my 2 cents on current state of market. If you're someone who want to take advantage of correction in the market but don't get enough time to track the market closely, you can explore my weekly video series and join my close community where I share one exclusive video every week. It includes tracking more than 200 quarterly results along with my comments on result, valuation and expectation. In this series, I also share stocks I'm adding or selling in my portfolio. I'm already sitting on some cash and if there's further correction, I'll be ready to grab the opportunity and would inform my close community. But again, this series is only for long-term investors. You can get the detail on my website or via the join button. There's also an additional discount for Diwali, but slots are limited. You can get the discount code in the pinned comment. Now let us look at the Diwali picks for 2024. Okay, before I share the names, let me set the expectations right. Every investor in the stock market has different risk appetite and different investment horizon. Based on that, some like to keep higher exposure in micro caps, small cap, SME stock, while some like higher exposure in large caps. Personally, I like to keep a fine balance across large, mid and small cap. Also, I like to diversify my investment across sectors and themes. And I usually avoid micro caps with some exceptions. Some people like to invest majorly in micro caps and SME stock. It might work for them. But I find SME stocks and micro cap extremely volatile. My goal is not just focus on return, but focus on risk-adjusted returns. And most important, I don't just look at momentum stock for next 6 months or 1 year. The problem is majority of people are looking for stocks that can make quick money for them. That's the key reason people always search for Diwali picks. But I'm very clear that I only focus on stocks for long term. I don't chase momentum. Some people only like to invest in stocks that are in momentum. That might work for short-term trading, but it does not work in long-term investment. Considering all these points in mind, let us look at my top long-term picks that can be considered for Diwali 2024. So first stock in my list is Reliance Industries. Now why Reliance Industries? So in my opinion, consumption is one of the biggest wealth creation theme in India. It's because of 145 crore people with rising income and spending level. And Reliance has successfully transitioned itself from an oil company to a consumer-focused company with leadership in 2 largest sectors of India, retail and telecom. In my opinion, both these sectors have a humongous growth potential and Reliance would be a direct beneficiary of it. On top of this, Reliance is aggressively foraying into the digital world, including JioCloud, JioBrain, which is an AI vertical. Plus, it has entered into new energy vertical that would focus on sustainable energy. I believe that all these sectors are sunrise sectors with multi-decade growth visibility. Plus, all these sectors require massive investment, so entry barriers are extremely high. Now, if you look at recent Q2 performance, Reliance EBITDA and net profits have fallen. It's mainly due to weakness in oil to chemical sector that has struggled due to fall in crude prices. But in my opinion, markets have already discounted near-term challenges. So if you look at Reliance share price, it has not moved in almost 3 years now. By the way, there's a recent bonus issue due to which its share price has halved. Today, Reliance is available at a P of 27 that looks quite fair and worth considering in the portfolio. On top of that, Reliance also intend to demerge and list its retail and Jio business separately. That can also result in potential value unlocking. Considering all these factors, I believe that Reliance at current levels of around 1350 is worth adding in the portfolio. And that's my first pick of Diwali 2024. Then my second stock pick is ICICI Bank. Now this is part of my third consecutive Diwali pick now. Reason is simple. Banking sector is the backbone of the economy. Today, the banking sector is struggling. But for the economy to do well, banks have to do well. There's no alternative. And I believe that ICICI Bank has shown best consistency in the last few years among private banks. It is constantly posting good quarter-on-quarter result in spite of ongoing challenges for the banking sector. On top of that, it is available at a price to earning of 19 and price to book of 3.45, which is at par with its median valuation. So there's a decent valuation comfort as well, and earning growth is also good. So ICICI Bank is my second pick. Third stock to consider adding is Tata Motors. There's already a 30% correction in its share price from highs of 1180 to current levels of 880. Here, please understand that there's a reason for correction. And the reason is Tata Motors is facing a high inventory issue. And the market expects that it would have negative impact on its profitability in the near term, which I agree. But my point is that market has already discounted a majority of bad news where Tata Motors is trading at a price to earning of 10 and price to sale of 0.7 against Maruti PE of 25 and price to sale of 2.5. That's the reason I believe that downside risk for Tata Motors is limited from current levels. As far as long-term picture is concerned, Tata Motors is among leader in passenger cars in India and has got a strong dominance in electric vehicle as well. Plus, Tata Motors Jaguar Land Rover business segment that contribute the most in its business is also very promising. On top of this, it has the best promoter pedigree of Tata Group. So in my opinion, Tata Motors can be considered for Diwali 2024. Then my fourth pick is from wealth management sector. It's Nuvama Wealth. Again, I've already done a detailed video on why wealth management is a multi-bagger theme in India. Simple reason is affluent population in India is growing at a fast rate. Currently, this population is around 60 million and expected to touch 100 million mark in next few years. Obviously, when people earn more, they need professionals to manage their money. And that's where Nuvama can be a strong beneficiary of this trend. Companies both top line and bottom line has grown at a very fast rate in last few years. Profitability is also high. Here we can't look at debt to equity as it's into wealth management. And even today it commands a reasonable PE of 28 and EV to EBITDA of 8.6. Now this is the best valuation among all the wealth management firm as well as AMCs. Yes, there's one risk and that is wealth management firm earning growth are linked to market performance. If the stock market does well, people invest more money. That's the case in recent couple of years and why all wealth management firm has outperformed. But if the stock market underperform, investment flows can also reduce and that can impact the earning growth of wealth management firm. Having said this, wealth management as a sector has immense growth potential in India for the next few decades and Nuvama should be a strong beneficiary of this trend. My fifth stock pick is from textile sector. It's Indo Count. It's India's largest home textile company with around 75% business coming from US. Company's top line and bottom line has been growing at a very good rate in last few years. Profitability is good, debt to equity is under control and valuations are quite reasonable at P of 2021. Management has guided to double the revenue in the next 3-4 years. I think that going forward, Indo Count could be a strong beneficiary of recovery in US economy that would result in increase in demand. Plus, there is a clear trend of China plus one where US retailers are trying to reduce dependence on China. Considering all these factors, Indo Count can be a good bet for this Diwali. The next stock in my list is from recycling space. I believe that recycling industry in India has a very strong tailwind due to focus on sustainability. Now, there are a lot of promising names in this space like Gravita India, Ganesha Ecosphere, but their valuation is on higher side. Although Gravita has corrected around 25%, but valuation I feel is slightly on the higher side. Another 10-15% correction on Gravita would make it worth adding. Likewise, Ganesha Ecosphere is also trading on higher side. Hence, this Diwali, I'm selecting Antony Waste Handling Cell as my 6th stock pick. It's a leader in Indian municipal solid waste recycling segment that include your solid waste management, transportation, processing and disposable service. Company has recently entered into WTE, that is waste to energy segment, with construction approval of its first plant in Maharashtra with capacity of around 14 megawatt of power. In last 5 years, both its revenue and net profits have compounded at an excellent rate of 25%. And valuation wise, its P ratio is 24. So valuations are also comfortable. Hence, Antony Waste is my pick from recycling space. My 7th stock pick is from Pharma sector. It's Marks and Pharma. I recently discussed Marks and Pharma in detail. It is engaged in the research, manufacturing and marketing of generic pharmaceutical products that include OTC product, that is pharma products sold over the counter that does not require any doctor's prescription. Plus, it also sells generic prescription medicine that include capsules, oral liquid and ointment. Company's top line and bottom line has grown at a very healthy rate in the last few years. Profitability is also decent, debt to equity is negligible and company is trading at a PE of 37. Here, company's management has guided for around 3,000 crore of top line by FY26 against their FY24 revenue of 2,177 crore. So that's nearly 50% growth expected in 2 years and margin would remain in the range of 20%. Considering that, it should continue to do well. My 8th stock pick is from IT sector. It's a microcap company named All Tech. I recently covered this company when I discussed 3 microcap stocks that I am tracking very closely. Basically, All Tech helps enterprises in their digital transformation, including cloud migration. All Tech is a tier 1 partner of Microsoft where it uses Microsoft product in its digital transformation of enterprises. Company has been growing at a very good pace in last few years across top line and bottom line. It has excellent profitability and zero debt. The most interesting part is, in spite of having a market cap of around 850 crore, All Tech is sitting on cash worth 120 crore. This money would be used in inorganic growth via acquisition. Considering the fact that cloud deployment is one of the fastest growing vertical within IT sector and Microsoft has a leadership in this space, All Tech's future is looking very bright. Its management has guided for 20 to 25% CAGR growth in the coming years from organic growth. Remember that. Inorganic growth would be additional. So current PE of 35, All Tech looks quite reasonable. My final 9th stock is from health tech domain. It's MediAssist. Again, I've discussed it recently in detail. So MediAssist is a TPA, that is third party administrator, that basically acts as a link between insurer, healthcare service provider, that is insurance firm or corporates in a case of group policy, and then healthcare provider like hospitals. I always say that if you can identify a company that has a leadership in the sector and the sector itself has huge growth potential, then company can also potentially grow big. That's where MediAssist, which is still a small cap company, is very well positioned to benefit from growing needs for health insurance in India. Being a leader in the sector with managing around 25% insurance premium of entire country, MediAssist can grow big in the coming years. Financially also, company has done well in last few years across top line and bottom line. Profitability is also high, debt is negligible and cash generation is also good. Recently, many top fund houses have added MediAssist in the portfolio at levels of 612 and today it is available at around 638 with PE of 56. So that's my 9th stock pick for Diwali 2024. So if I conclude, my top stock pick for Diwali 2024 include Reliance, ICICI, Tata Motors, Nuvama Wealth, Indo Count, Antony Waste Handling, Marks and Pharma, All Tech and MediAssist. Please note that there are many other promising names in my list, but I don't find valuation comfort at the moment. Having said this, another 10-15% correction will create fantastic buying opportunity. So I'll track them closely in my weekly series. Now tell me in the comment which is your preferred stock for Diwali 2024. I'll see you next video. Till then, take care.